I'm sitting here with Dirk Forrister, the President and CEO of IETA, the International Emissions Trading Association.
That's right.
Okay. And earlier this week he released the survey. Dirk, can you show us the survey you have
Sure.
there?
Good.
It's a survey of market participants across all the different carbon markets. And we wanted to talk a little bit about what the findings were. And I think I'll just throw it to you first and ask what you think are the most important, most significant findings of this year's survey.
Well, there's a lot of rich detail in here about what people in the markets are looking to right now, and some of it is what you would expect and look at their pricing expectations for the future, where they think, for example, EU allowance prices are going to average out to be over the coming phase. But I think what the real message of this year's report is that people are in a policy mode of looking at the new drivers for the future of markets. And there's a lot of interest in where the international policy making is going and what the role of project-based mechanisms would be. Something like 80% of the people in the survey think that there'll be some form of a project-based mechanism in the UN architecture. So that means there's going to be a lot of focus on what does that look like. I also think that there's a lot of interest in other policy reforms that are happening, whether it's in the EU ETS or in China or in the United States, and there's a good bit of information about the role of markets in those various places. Probably the other really interesting finding related to that is how many people think that China, and it's a strong majority that think that China is going to move toward a national pricing model. Nobody knows exactly what it will look like yet, but it is sort of a strong expectation in the market, and stronger even than the U.S. numbers would be.
Mm-hmm. Yeah, I found that really fascinating. What was also kind of encouraging was the feelings about the Green Climate Fund.
Mm-hmm.
I mean, almost everybody thought it will be up and running when they say it will.
Right.
And when they asked people what kind of activities they wanted to see, the biggest one was, if I remember, it was risk mitigation, right? Wasn't that the number one?
Right. Helping to de-risk climate investments. And I do think there's another strong message coming out of that is that there's support for that fund having a panoply of different tools at its disposal for crowding in private investment. And so that's, frankly, for us at IETA, an encouraging sign that people do, well, their thoughts are beginning to crystallize around the type of instruments and strategies that the fund ought to use, but that also that it will maybe have their interest in co-investing alongside the Green Climate Fund. So yeah, and I hope that's a new feature we can include in future reports.
Mm-hmm. And also voluntary markets. There was it was kind of interesting to see the types of projects that people felt would work in the voluntary markets. Renewable energy was higher than I expected.
Mm-hmm.
What do you read into that?
Well, it's one of the things I found interesting is that there's a bit of a feeling that it's still a positive feeling about voluntary markets, maybe a little bit lower than I would have hoped for the market as a whole. But what's interesting is that there's a lot of, as you're pointing out, a lot of enthusiasm for particular strategies like renewables and efficiency. Cook stoves scores high, obviously, as does RED+. There's a pretty strong showing for RED+ in there. Any of those individual strategies showed sort of more enthusiasm and interest and belief that it's got viability going forward than the market as a whole, which is kind of interesting. I think that sort of reflects how that market in particular has moved toward charismatic projects, things that people like in specific project categories. Anyhow, I did think that was an important part of the study, but I'm also glad that there are other studies that dig more into exactly what's going on in voluntary markets, because it's a fascinating space.
Mm-hmm. Okay. Anything else you wanted to throw in here before we wrap up?
Just that I think one of the things that it's a pleasure to work with PwC on this report. They have such a professional team, do a terrific job. And one of the things that I've enjoyed in working with them on this project is that this is a series that we've done with them for the last 7-8 years. And there's some temptation when you know you're in a down market just to not talk about the numbers and let's step away and change what we look at, because we don't want to talk about the negatives. But I'm pretty sure that by sticking with this, that we're going to have a lot of years where we look back at the valley years, the valley of death, and we look back at a time when, can you believe that price expectations were so low, because we've seen so much more activity and a lot of activity coming into climate mitigation and adaptation that is commensurate with a 2-degree target. That means that there's serious work to be done.